Welcome back to ICT Trading Concept. How are you all? Today's video, I would love to say, I would love to talk about how you can make your trade simple. Okay, and I know it's a very confusing thing because most of the people or new traders they think how I can enter into the market. Okay, if you would love to enter into your market, if you just follow some steps, I believe your trading will be much more easier. You don't need so many things like breaker, order block, rejection block, maybe inversion fair value. No. You don't need that all at all. Okay? If you just use the fair value gap concept, it's too easy to trade. Okay. So in today's video, I would love to go step by step, and I will go from weekly chart to 1 minute chart to show you the entry setup and how you will take your entry. How do you think about the price action? When you should expect the entry setup? Everything I'll clear. I'm little sick, so please forgive if I cough or so do something inside the video. Please, I believe you will forget me. Okay. So this is the Nasdaq chart and this is the weekly chart. This is the last week candle. Okay. See where price came. First, you have to go to your weekly chart. This is the last fair value gap from the weekly chart. The very previous week candle, it came to the consequent encroachment and it was actually showing that market respecting the last fair value gap. It was showing that. Okay, so I can expect price will expand lower this week. Price will expand lower. I can easily expect that from the weekly chart. So you have to uh, make a guess where price could go that specific week. So if you are with me for long, you already know that I have made a top-down analysis before starting this week, and I have already told you where I'm expecting the price run for this week. So I was expecting price will go lower. Now I will go to daily chart. So from the daily chart, look, this fair value gap is most obvious. Why this one is most obvious? Because this is the last fair value gap. Look at this leg. Do you see any other fair value gap below that is specific that fair value gap? No, I don't see. I don't see any fair value gap. So this is the last fair value gap. Price should come to the last fair value gap. Above this fair value gap, there is another fair value gap that could be your target as well, but that is different thing. But if you want a direction, this is the way you will mark your direction. So I have marked this daily fair value gap beforehand. When price was over here, I marked this fair value gap and I told you I am expecting price will come to this last fair value gap this week. Okay, below this fair value gap I have sell side liquidity over here, imbalance over here, and the weekly fair value gap over here. So that is different matter. I would love to talk about this week, how you will determine your bias and how you can make your entry much more easier. Okay, so from daily chart, when price was over here, I was expecting price will come over here to this last fair value gap. So from weekly chart, I was expecting price will go lower. From daily chart, I have marked a level where price could come. Okay, so this is the level. Now if price would love to go lower, that is different thing. I was expecting price will come at least to this fair value gap. Let me go to the hourly chart. So this is the hourly chart. This is the starting of this week. We had a holiday in Monday, so I have just marked from the Tuesday 12 a.m. midnight New York local time, and this is the Friday close, that means 4 p.m. from Friday. Okay, and that is actually the Friday range. I mean from Friday morning session to Friday PM session close. Okay, so this is this week. Price was expecting, was going lower where it was heading to this daily fair value gap. Remember, guys, this fair value gap was more obvious. So I was expecting price will come over here. Now I am not going to talk about the rest of the day. The Tuesday, Wednesday, Thursday price action. I would love to talk about the Friday price action. When price come to this last fair value gap, okay, when it came here, I was expecting some kind of reaction from there, from the last fair value gap, just like the weekly fair value gap. Remember, when price came to this weekly last fair value gap, I was expecting some kind of reaction. That means price will expand lower. So the same thing I'm expecting over here. When price come to the last daily fair value gap, I was expecting some kind of higher run from there. Let me go to the 15-minute chart. So this is the 15-minute chart. Until now, I was expecting something. Now I need to frame my trade. Okay, and how do I do that? Look, when price come to this daily fair value gap, it went. There was a news at 8:30, so that candle actually made for the NFP news. We are not allowed to take our entry before the news or after the news or at the news. Okay, so that's called gambling in my opinion. So you can see using the NFP news, price went lower, then it went higher. When it went higher, this is my market structure sheet. So I am looking for a setup from the 15-minute chart. Okay, not from 1-minute chart, not from any other time frame, not from hourly chart, nowhere. Okay, I'm just expecting this. I mean the setup from 15-minute chart. And what type of setup? It has to take the liquidity, it has to give me the market structure shape, then it has to give me fair value. So it has to do all of these things from 15-minute chart. I'm looking for entries now. Okay, so what is the main thing from here? When price come to the last fair value from the daily chart, I'm expecting some kind of higher run. When I'm expecting some kind of higher run, I came to 15-minute chart and I'm looking for a setup. Do I mean, am I going to take my entry to that fair value? No, I'm not going to do that. I'm just telling you what you should do. Okay, this is the easiest way to, frame your trade. Okay, first you have to wait for the perfect setup from the 15-minute chart. It has to take the liquidity, market structure shift, and the fair value gap. When you will get that, you see price started to go higher. Are you willing to take your entry over there? No, you are not going to do that. There is no reason uh, to take your entry over there. You have no reason at all. Okay? Why? Because you are waiting for the precise price action. So when price started to go higher, I am not hurried to do anything because I can see this high and that high, all of those highs has made relatively equal highs. Okay, so price came here, it failed to take that buy side liquidity. What does it mean? Instead of that, it has made that buy side liquidity more stronger. Now if it can take that buy side liquidity and it expand higher, we will look for another another buy side liquidity. Okay, as this buy side liquidity didn't take, so I am going to use that buy side liquidity until now. But before that, there was some buy side liquidity over here as well. uh, that is not important because I'm showing you the perfect way to find your setup. So price has taken the liquidity, there is my market structure shift, price went higher. Now what should I expect? That price will come to this fair value gap. I actually marked two fair value gap, and both of those fair value gap are really important for me. So when I see price come to this fair value gap, the first fair value gap, the second fair value gap, immediately I go to 1-minute chart. Okay, so from 1-minute chart, here I look for the same thing I was looking in 15-minute chart. That means it has to take the liquidity, market structure shift, fair value gap. If price can come over there, I would love to mark some kind of 1-minute buy side liquidity, and then I will go for the trade. Okay, so first time this is the upper fair value gap. Do you remember from the 15-minute chart? Now I am looking for entry now. Okay, until then, until 15-minute chart, I was waiting for the the setup. If the setup can happen, then I will take my entry to 1-minute chart. If the setup can happen to the 15-minute chart, I will come or I will go to 1-minute chart and I will look for my entry. So this was the first fair value gap. Price come over here. Okay, it has taken the liquidity perfectly. So that has your liquidity taken, and I believe it is too easy to mark the liquidity taken. I believe that. Okay, then I got my market structure sheet over here. This was my market structure sheet. Okay, let me mark it. So this is my market structure sheet. Now if you ask me, brother, there is a swing high over there or maybe here, so that is my market structure. No, that is not my market structure sheet. For me, or according to my rules, this is my market structure sheet. So this candle shifted the market. Before before this candle, I wasn't sure that market is going higher or not. Okay, so after shifting the market structure, there I got the fair value gap. So this is the last fair value gap. Let me mark it. The same thing I was actually marking from the 15-minute chart, and that is the upper parallel gap. Now you can tell me that, brother, it traded this parallel gap. I mean, this candle traded that parallel gap. I don't care. Why? Because it has traded that parallel gap before shifting market structure. So I'm going to use that parallel gap one more time, and I believe it didn't. I mean, it didn't complete your job yet. See, this candle has traded that parallel gap before shifting the market structure. If after, I mean, if the candle could trade that parallel gap after market structure shift, I would take my entry over there from 1 minute chart. As it traded the parallel gap before shifting market structure, I'm not doing anything over here. And now I'm going to mark the buy side liquidity from 1 minute chart. So that is my obvious buy side liquidity from uh, 1 minute chart. You can see price actually went above the buy side liquidity, and then it is just doing something over here. So I had no opportunity to take my entry over there. But look, it didn't take that extreme buy side liquidity till now. So this is the extreme buy side liquidity from the 15-minute chart. Instead of that, it came and take and the internal buy side liquidity, or from a lower time frame buy side liquidity. It was, I mean, choppy over here. It was so choppy over there. Then it went lower. It started to go low. Am I looking for sell over here? No, I'm not looking for sell over here. Why? Look from 15-minute chart. Okay. So from 15-minute chart, price came to this first parallel gap. Now, when it went higher, it didn't give me any setup from 1 minute chart. Then it started to go lower. I don't know how long it will come. Okay, it can come any of this 1 minute parallel gap and then started to go higher. It can do that. Okay, that is the reason I'm not interested to take my sell over here. I'm waiting for the price. Now, price went through the first parallel gap. This is the first parallel gap from the 15-minute chart. Let me go to the 1 minute chart one more time. So this time, actually, price went through the first parallel gap, and where did it came? To the last parallel gap from 15-minute chart. What I have showed you till now from weekly chart, the price came to the last parallel gap. It has. I was expecting some kind of reaction from that last 15. I mean last weekly parallel gap. Price came the last daily parallel gap. I am expecting some kind of higher run or reaction from the last daily parallel gap. Now, this is the 15-minute parallel gap, okay? So, I'm expecting some kind of higher run or reaction from the last parallel gap. So, I'm going to mark the liquidity here. So, it has taken the liquidity over there. This is my liquidity taken, and I got my market structure shift over there. So, that high, when this is broken, that is my market structure shift. Below here, nothing is my market structure shift. If you, I mean, ask me why that is, I have already uploaded the video and I have repeated that things again and again. But obviously, I will put the end screen that video how to avoid the losing trade, and I will put the uh, link to my description. So if you're interested to mark the swing high or swing low, how to mark them, you can watch the video. So when I got my market structure shift, there was two parallel gap. This is the first parallel gap. This is the last parallel gap. Now you can tell me, brother, there is another parallel gap below here. Okay, over here there is another parallel gap. Why you are not looking for that parallel gap? The reason is this is the last day of the week, and this is the last hour, even very near to the 4 p.m. That means the session closing. Okay, so if market would love to go higher, it has no time to go that far, and it will be hurry to take some kind of buy side liquidity. That means it is going to give me some kind of setup. Now this thing you will understand slowly. I mean, if you stay with me slowly, but definitely you will get the point. Okay, so this is my buy side liquidity from 1 minute chart. Why this is my buy side liquidity? Look at that high and that high, they are relatively equal highs. So I have marked that as my liquidity. I'm willing to take my entry when price come tap to the first parallel gap, and I will cover my stop loss. I mean the last breakaway gap. I will cover that through my stop loss, and I will target over here from 1 minute chart, maybe a little bit above the buy side liquidity. So that will be my entry. So now I hope you got the point how I determine the entries, and from the weekly chart to 1 minute chart when I take my entry and how I take my entry. Because from 15-minute chart, when I see the setup, I go 1 minute chart and I look for the same setup from 1 minute chart. That helps me to find out the perfect setup. And there is much more possibility to work that setup work perfectly. Okay. So I hope guys you will understand or you will get something or some direction from this video. If it can help you, or if you are helped by this video, please give me a thumbs up. If you are new, you can subscribe to my channel. Okay guys, thanks for watching the video. See you guys. Bye bye.